Hi, everyone. You're here because you want to stay sharp without getting lost in the noise. So let's dive right in. Bitcoin just blew past $84,000, a new all-time high. Today, we're digging into what's actually fueling this rally and why this time might feel a bit different. We'll look at the big institutional money, the return of everyday folks, and some of the underlying fundamentals.
Exactly. And I think the starting point really has to be the Bitcoin spot ETFs. Their approval earlier this year was, well, it was a game changer. It essentially gave a green light for, major players. Think BlackRock, Fidelity, firms like that.
Right. So they could suddenly offer Bitcoin much more easily through like a standard investment product.
Precisely. It opened the door for a whole new wave of capital to flow in using a structure that big investors are already comfortable with. And, well, a lot of money has flowed in.
And the immediate effect of that cash coming in is pretty straightforward supply and demand, isn't it?
It really is. As these ETFs buy up Bitcoin to back their shares, that Bitcoin gets sort of taken off the readily available market.
So less supply floating around on exchanges.
Exactly. Less supply hitting the exchanges, but demand is still strong or even growing. Basic economics tells you that tends to push prices up. We're seeing that play out now just on a pretty significant scale.
Okay, so institutions are definitely a big piece, but it feels like there's more to it. The buzz online suggests regular investors are jumping back in too.
Oh, absolutely. We're definitely seeing a kind of resurgence there. Google searches for things like how to buy Bitcoin are way up. And you see it on social media too, right? TikTok, YouTube, lots of crypto content creators are active again. It has a little bit of that 2021 energy.
Yeah, I remember that.
Yeah.
But is it just the same kind of hype, or is there something different about the retail interest this time?
Well, that's the interesting question. There are signs, perhaps, that this wave of retail interest might be, let's say, a bit more substantial, maybe backed by more conviction, not just, fear of missing out.
So perhaps a bit less speculative this time around, more belief in it as a real asset.
That seems to be part of the narrative, yes. It feels like there's potentially a slightly deeper understanding or commitment compared to some previous cycles.
Okay, so we've got the ETFs bringing in institutional money, and retail investors are back, possibly with more conviction. What about the fundamental reasons, beyond the trading aspect?
Right, and this is key, I think. This rally doesn't seem primarily driven by, say, meme coins or, stimulus checks like we saw before. There are underlying factors.
Like what specifically?
Well, the big one is Bitcoin's core design. It's limited supply. There will only ever be 21 million Bitcoin. That scarcity is hard-coded.
Fixed supply.
Exactly. And you couple that fixed supply with growing global demand and adoption. It creates upward pressure.
And the whole digital gold idea, the hedge against inflation, that still seems prominent, doesn't it?
Very much so. With governments printing money and concerns about currency devaluation, some people see Bitcoin's fixed supply as a way to protect their wealth, a store of value.
Are there concrete examples of this playing out?
Yeah, look at El Salvador. They're still committed, even mining Bitcoin with volcano energy, which is, well, it's quite something.
Oh, yeah.
And you hear consistent reports about, billionaires adding Bitcoin to their holdings. Plus, perhaps most significantly,
Go on.
there's serious talk in some circles, about central banks potentially exploring digital assets, maybe even Bitcoin, for their own reserves.
Wow. Okay. Central banks. That feels like a potential paradigm shift.
It really would be. If the institutions that manage national economies start seeing digital assets as legitimate reserve holdings, that moves things far away from the sort of fringe investment category.
Right. It signals a much deeper level of acceptance.
Absolutely. A fundamental change in how the traditional financial world views this space.
Okay, so let's quickly recap. The big drivers seem to be, number one, institutional cash flowing in via those new ETFs.
Yep.
Number two, retail investors are back, maybe more seriously this time.
Seems like...
And number three, strong underlying fundamentals, like limited supply, growing global use, and this perception as an inflation hedge, possibly even gaining traction with central banks.
That sums it up pretty well. And, you see all sorts of predictions now. Some analysts are calling for $100,000 Bitcoin this summer. Others are a bit more cautious.
Right, the crystal ball gazing.
Yeah, but regardless of the exact price target, the bigger picture here is that cryptocurrency, especially Bitcoin, seems to be maturing. It's evolving.
It really does feel like a transition, doesn't it? Moving beyond just a speculative side bet and becoming a recognized asset class that's forcing people to kind of rethink money itself.
Which leads to a really interesting thought to leave folks with.
Yeah.
As traditional finance gets more and more entangled with these decentralized digital assets, what new possibilities or maybe even new challenges could that create for the global economy down the road? Something to mull over.